heck? We have Charles Payne, host of Making Money, right here on Fabulous Fox Business. We have Joe Lavorgna, SMBC chief economist, former NEC chief economist at the White House, and my good friend French Hill from Arkansas, chair of the Financial Services Committee. Welcome to all of you. French, I go to you, man of the world. Let's start with the Pope. You are Catholic. What do you think?
I was blown away.
Yes.
I got the text on the train to New York, and I can't stop thinking about it. I thought I would never see this day. And it struck me, here we are as we celebrate the 250th anniversary of our nation, the nation that stood for religious liberty, a nation that allowed religious liberty for the first time really in world history. And now we have this honor to have an American as the Pope. It's amazing.
I think it's pretty extraordinary. Joe Lavorgna, what do you make of it?
I can't say it any better than the chair said it. Nothing to add.
Charles?
I love it, and I think to your riff, it's way too early to start wondering, and already I'm seeing all of the tweets and the retweets and all of that kind of stuff. Let's just celebrate the moment.
That's right.
I'm the only one in my family who's not Catholic. So my children, all the wives, I'm the only one. But I go to Catholic church all the time because I love Father David, and my granddaughter, she serves every Sunday. And so I'm just really happy that there is an American there, because a lot of people said it wouldn't be, in part as a push on Trump, right? I mean, everything is. And so all of the experts, once again, were wrong. And I think that's one of the lessons we all learn, right? That over and over again, that the experts don't know much. Over and over again. We just keep learning that. So we don't need to learn that lesson the hard way.
Yeah, well, we will see.
We learned it again with tariffs today, too. I mean, with the first trade deal.
Yeah, let's go there. Let's talk about that. French, you're head of the Banking Committee, or Financial Services Committee. U.S.-Britain free trade. So interesting. Remember, when Brexit finally was won in England and Britain, so many of us talked about how Britain could sort of have a start-over game, and the first thing they ought to do is a U.S.-British free trade zone, look to America rather than the European Union. So it took a while, but here we are, a Republican president and a Labor prime minister, for that matter. It's funny. What's so hard about this? Reciprocity, fairness, and a kind of circle of economic and national security. What's so hard about this? And why is this such a bad thing? Everybody beating on Trump for this? Why? I don't understand this. Look what he's just done.
This is exactly what we've waited for. We've been in a time warp during the Biden administration. If Trump had been reelected in 2020, it would have been top of mind. And you know this from your work in the White House. We would have had a free trade agreement with Britain. So I hope that this first step, reciprocity, good for American agriculture, good for American technology, opens up a future FTA with Great Britain that includes pharmaceuticals, includes digital, includes greater agriculture, to bind our two great nations of our special relationship together in trade. It makes perfect sense. And during Joe Biden's presidency, he let Trade Promotion Authority expire, and he never pursued any new trade arrangements. So the energy is there, and I'm glad Great Britain, the United Kingdom, and America were first up.
Charles Payne, Trump, maybe it's a throwaway remark, but he said there's 3 others coming. Now, I don't know how fast that is. I'm not sure which ones. I think it's going to come from Asia, but I don't really know. The stock market seemed to like this quite a bit. What's your take on it?
We are at a point right now where it's ironic, because Wall Street, the hedge funds and those folks, they hate this so much. They hate it because, honestly, they just don't want to rock the boat. If you look at where wealth has gone in this country since 2009, the majority of it has gone to assets. If you own assets, fine. If you're a worker, nothing. And it's at a point where most nations in history at this point would have a revolution on their hands. And I think the election of Trump was that revolution at the ballot box, and why his job is so important. So Wall Street has bet heavily against this market. We'll see what happens. I think another couple deals, especially if Japan and or South Korea, breaks this market out, changes the thinking on everything. India maybe. Changes the thinking on everything. Wall Street can go back and refigure their recession calls, and this is worse than COVID, worse than the great financial crisis, worse than 9/11, and maybe get on board.
Can I just expand on that for one more question? Because this is your touch. I've said this too, not as well as you just said it, but nor as with the authenticity as you follow it. But look at The hedge funds, from what I gather, there was a story in the Wall Street Journal financial pages about this. The hedge funds have been short the whole time, and they've therefore missed the rebound after the brief correction. But the retail, quote unquote, which I regard as ordinary folks buying the spiders, buying cheap exchanges, they were in the market and buying. The hedge funds were selling. What does that tell you right there?
The dumb money's been loading up, and the dumb money. Guess what? They learned the lesson. Buy low. It was near a bear market, and over 19% pullback, and they bought. And hedge funds have loaded up to the gills. It's a bet against cyclical stocks, which is a direct bet against our economy.
Yes. And
they are on the cusp of losing big time. So, on the top of whatever they lose financially, they're going to be. It's going to be a little embarrassing that the dumb money will beat them again, because it won't be the first time.
I love it. I love it. No, it won't be the first time. You betcha that's right. And it won't be the last time. Joe Lavorgna, you're chronicling, first of all, speaking of the economy, one point you're making is tax revenues are coming in hand over fist. That's bullish. Second point you're making that I really like, tariff-related revenues. What did you say? 45% ahead of a year ago.
Yeah, where they were.
Coming in $125 billion at least this year. We don't know yet.
It's probably closer to 170.
But what does that tell you?
Well, it tells us a couple of things. One, just the fact that everybody brought inventory forward in the first quarter, that's inventory that people expect is going to be sold. It's the same thing with vehicles. So you don't buy a vehicle if you're worried about your future job and income prospects. So to me, the fact that activities brought forward is encouraging. And if we look at the high-frequency data right now, it all looks good. Jobless claims are low. Weekly chain store sales are high.
Jobless claims came back. They had a little puff up, and everyone made a big deal. They came right back down.
Gasoline demand has been super strong. That's good. TSA bookings. Even container ships. If you look at container ships, we're one of the higher readings in the past half a dozen years, excluding COVID. So the economy is very much alive. It's very healthy. We get the tax bill through. People should be talking more about that. Growth is going to be fine. The economy is extraordinarily resilient, and as long as you've got pro-growth policies, you'll be able to withstand a couple months' volatility. I mean, it's ridiculous. The cumulative return in the S&P in 23 and 24 with dividends is about 50%. And as to sort of piggyback on what Charles is saying, people are complaining as if the world is ending in April. And I told clients, this is a negotiation. The president's transactional. He's going to do what's best for the economy. And now we're starting to see that. Deals are coming forward, or at least the framework for deals are coming forward.
You know, Frencho, I still, there's a certain amount of common sense here, okay? We should get market access in countries that denied us market access for a long time, okay? China included in that. World Trade Organization broke down. World trading system becomes so uneven. Tariff rates are 3, 4, 5, 6 times what they are here in the United States. The idea of reciprocity. You charge me, I'll charge you. But if you charge me less, I'll charge you less. What is so hard to understand about this?
It's pent-up demand because we've never been able to resolve. The WTO has been broken for years. And so there's been no resolution. In the past, we would take somebody to the WTO and we would get reciprocity. We'd get non-tariff barriers reduced. And it's just that system's broken down. And that pent-up demand for trade freedom is what's, I think, driving President Trump's opportunity here. And I think American workers and American production and foreign direct investment in America will all benefit from it.
Okay, Joe said, you know, if we get the tax bill through, reconciliation bill through, you're one of the leaders in the House. We're going to get it through?
We're going to get it through. We announced today that Energy and Commerce and Ways and Means will mark up next week. I think that's a go signal. And if we get the certainty of tax resolved here, lowering the spending growth rate down and talk about the right sizing of regulation, and we get trade deals, this economy will really react.
No millionaires tax?
No.
No millionaires tax. We're going to get the overtime.
We want to be pro-growth. I don't think we should tax, stock buybacks. I don't think we should have a tax on millionaires. We need to be pro-growth and focus on pro-growth. And President Trump I think, will get that balance right in this tax bill. So they're going to work all weekend on it.
This is good. So, Charles, we will get better trade deals. We're going to get a good reconciliation bill, cutting taxes and spending. We've got a Made in America Pope. He says work hard. At least his predecessor, his namesake predecessor, said work hard. I don't know what he said. His namesake said it, work hard. But think about that. Hard work, good trade deals, lower taxes, deregulation. I don't understand how this could not be a bull market scenario of considerable size.
It could be the summer of love, the Republican version. The summer of love, okay. Not the Seattle version or the Portland version. Now, if they do, by the way, if they do go with a millionaire's tax, please don't start at 2.5 million because, I mean, start at whatever.
Start 100 million.
Yeah, 100 million. Yeah. But no,
don't have to worry about that.
Phil, people should be confident.
We're salary workers here.
American exceptionalism is here. It's not going anywhere.
And okay, I'm going to tread probably where I shouldn't tread. American exceptionalism is here. It may well grow. And here we have what no one thought possible, an American Pope, authentic American Pope. Now, people smarter than me are going to work through this in the days and weeks ahead. But somehow, someplace, I would say that's metaphysically linked. Don't ask me any more specific.
And all on the 80th anniversary of VE Day. Might as well throw that in there, too.
Oh, I love that. And the 250th anniversary of our Declaration of Independence and our founding.
Amazing.
I love that. Joe, you can chime in.
I was just going to say, American exceptionalism, if you look at the dollar has been still, even through April, very, very high.
Right.
Very high. I mean, it's up about 2% from where it was last fall. So if you're going to tell the U.S. is losing its exceptionalism story, the dollar should be massively for sale. And the reality is most of the weakness has been against the euro. And I'm going to bet from a growth perspective, a productivity perspective, the U.S. is going to outperform Europe as far as the eye can see.
Can't say it any better than that. That's good rap, Joe Lavorgna. And House Financial Services Chair French Hill and the great Charles Payne. You can catch Charles making money weekdays, 2 p.m. Eastern, right here on Fabulous Fox Business